Now, the general idea behind dividend growth investing is buying into different dividend paying stocks and ETFs that not only have the potential to move up in price over time, but also pay dividends and have the likelihood of paying more and more in dividends as time goes on. On top of that, over the years of building out a long-term dividend growth portfolio like mine that you see right here in the screen, investors can theoretically compound their portfolios and start the snowball effect much faster than it is if they reinvest their dividends into more shares of more dividend growth style stocks and ETFs over time. Now, the dividend growth strategy of investing is something that I've been sort of obsessed with over the last several years, and I've been doing whatever I can to gather as many shares of as many stocks and ETFs over the years that pretty much tick off all the boxes of what I'm looking for. But when it comes to dividend growth investing, there is something that I don't think enough investors are talking about, and there is a big problem, and I think it's about time we confront it face on. So if you're personally a dividend growth investor, or if you're building out a long-term dividend focused portfolio, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go through the main issue I have with dividend growth investing and a big problem most investors don't really think too hard about, at least I don't think they do, let's lay down some more groundwork and talk about why dividend growth is a timeless strategy according to ProShares.com. It says companies that consistently grow their dividends are popular with investors. These high quality companies typically offer stable earnings and strong histories of profit and growth, as well as fundamentals and business models. Historically, dividend growth companies have outperformed the broader S&P 500 index, which we like, and provided durable income growth across market caps and industry sectors. These attributes have timeless appeal, but can particularly be relevant during turbulent markets. This article goes on and on explaining why dividend growth investing has been a timeless strategy and why, and even how it's outperformed many other high quality strategies when it comes to stock market investing across the board. An ETF that offers what I would consider personally a perfect dividend growth strategy, at least historically speaking for the most part, is the Schwab US Dividend Equity ETF, or SchD. Now, SchD is an ETF with a high quality basket of holdings, and this ETF's performance over the long term has been amazing. I mean, the ETF is up over 200% over the last 12-13 years, and on top of that, this ETF has paid investors dividends every single quarter since inception, and as a cherry on top, has paid more and more in dividends historically over time. So this basically means that throughout history, if investors bought shares of SchD, they're not only up on their shares as far as price return goes, but they've been getting paid cash flow every single quarter, and historically more and more cash flow over time, which of course, if they reinvest that into more shares, that investor would potentially be building themselves quite a dividend snowball in their portfolio. Now, this is another great example of a dividend growth ETF because this is my largest holding as far as a dividend growth style ETF in my portfolio. I currently own over 620 shares as of right now. And the reason I own so many shares of SchD is exactly because it does offer sort of the dividend growth dream. But unfortunately, even with the dividend growth dream, there are some big problems I don't think a lot of investors realize. Now, take this for an example, a young investor that has a $10,000 starting principal in a portfolio and $12,000 extra a year to contribute into more shares. Now, before we move any further from here, it's not even plausible that every investor out there is going to have $10,000 to start off with. A lot of investors only have maybe a few $1,000s to start with, and on top of that, not every investor has $12,000 to contribute every single year. But just to prove my point, let's go through some numbers. So if an investor did have $10,000 and had another $12,000 to contribute per year, look at how many years it would take an investor invest into something like SchD, sort of the crown king dividend growth style ETF, to even earn a substantial amount of dividend income per year. Now, just going off of these numbers, and of course, these are all just theoretical numbers. This is all just estimation, but keep in mind, it would technically take an investor probably around 20 or 21 years to get to the point to where their dividend income is surpassing their yearly bills, or at least close to that. Now, again, everyone's bills are going to be different, everyone's expenses are going to be different, but if we were to argue that SchD is a good investment vehicle in order to have an investor sometime in the future retire completely off the dividend income alone, not saying they're going to draw down the principal, just retire off the dividend income, which is what a lot of dividend growth investors talk about. Although I personally agree that SchD is an amazing investment vehicle to do so, and I've talked about this time and time again on my videos, and like I said, I personally am heavily invested relative to my portfolio in SchD. The reality is still the reality in that it would take an investor probably 20 to 25 years to get to a point to where the dividend income given off from SchD would be substantial. Now, the main issue I have with this is simple. If you're personally a dividend investor out there that is trying to get their dividend income up to a point on an annual basis to cover your bills, cover vacations, whatever the case might be, Then if you follow the traditional dividend growth path, buying into dividend aristocrats that offer maybe 2 or 3% starting yield, but do have fast dividend growth historically, although sometime long into the future, you will most likely for sure have a large portfolio giving you and your kids a ton of dividend income on a yearly basis. The reality is that it's going to take several years, maybe more years than you even feel comfortable with, to be honest. Now, I know for me personally, I definitely have some investments in my portfolio that I'm not necessarily going to touch whatsoever for 20 years, 30 years, but I also have other investments in my portfolio that I might want to dig into, use some of the principal and or the dividend income a lot sooner. Which is why I personally think, and what I personally have been doing over the last 7 years, not saying this is the right strategy, not saying that you should copy my strategy, just trying to explain to you what I think some dividend growth investors are doing wrong. I personally have been building out a long-term portfolio that is a little bit on the higher yielding side, especially as a 31-year-old investor. Now, a lot of people have told me time and time again that why would I invest in anything high yield like QYLD, like JEPI, like JEPQ, etc. And they explained to me that I would be much better off buying into the S&P 500 or buying into low-cost index funds and then wait until I'm 50, 60 years old, cash them out and then retire then. But what those people don't understand is that I don't want to wait until I'm 60 years old to start using my dividend income or even to potentially even start using some of the principal invested in this portfolio. Instead, as a 31-year-old investor, I built out different positions in my portfolio that of course are low yield, dividend growth style, things like Apple, of course, things like Realty Income. But I also have different positions in here like 508 shares of JEPQ and 2,700 plus shares of QYLD. Now, by building out a portfolio that's not only dividend growth focused, but that's also income focused, sort of a hybrid of both of them, I not only hopefully potentially in the future have the potential to have this portfolio move up over time, pay more and more in dividends, at least as far as some of these positions go, but along with that, I built a portfolio, at least for me personally, that can substantially sustain all my expenses as of right now if I were to want it to do so. Now, I've been very clear and focused that as of right now, for me personally, I'm investing all my dividend income still at this point into more shares of more of my favorite stocks and ETFs on a daily basis. And as of right now, in case you're curious, most of my daily buys include things like SchD, some JEPQ as of recently, things like Realty Income, SPYI, Main Street Capital, etc., etc. And definitely check out my other videos if you haven't, because I talk about my daily buys quite frequently. But my main objective for this video is not necessarily to tell you to stop dividend growth investing, to stop buying into the highest quality dividend aristocrats across the entire market that might not yield the most today, but will offer massive dividend growth in the future. But I really want to reiterate the thing I say time and time again: ask yourself what you're really solving for and try to figure out what your strategy is long-term for investing. And for that exact reason, that's exactly why I have been building and still am building the portfolio that matches exactly what I personally am looking for. Like I said, and I'll say it again, I'm building a portfolio that has different positions in here, like my 623 shares of SchD that I'm adding more to day after day, that hopefully are going to pay me more and more in dividends over time. And with the price return we've seen so far with this ETF, hopefully also allow my net worth to skyrocket over the next 10-20 years. But along with that, because my goals align with an investor that wants more cash flow to potentially use some, or if not all, of my dividend income, and by future I mean 1, 2, 3, 4, 5, 6, 7 years. I don't mean in the next 35, 45 years. I wanted to build a portfolio that does have some higher yielding positions that might not give me the same total return of that as Apple, Nvidia, the S&P 500, but I'm perfectly okay with that. So is dividend growth investing an amazing strategy that's been tested time and time again and allowed a ton of investors to become extremely wealthy over time? I would say yes, 100% it is. But is that same dividend growth investing strategy perfect for every single investor across the market? I would say maybe not. And for that reason alone, I definitely just want to remind you all that even if certain names like I hold in my portfolio, names like Kimberly-Clark, names like UPS, these dividend growth kings that have been paying dividends and more in dividends over time, seem like the perfect stocks for you, ask yourself what you're really solving for and try to figure out if there's other options across the market that might suit more what you're looking for. But lastly, most importantly, now I want to ask you guys down below, would you as of right now consider yourself a dividend growth focused investor, an income focused investor, or would you more align with me, have a little bit of everything in your portfolio? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.